Hello traders, this is Chris Keenan. This is the weekend wrap. We had a pretty dull week of trading last week. Most of the majors remained in narrow, short ranges, and it made it difficult at best to make trades where you would go into a trade and go to sleep for the evening, wake up the next day, and it actually hadn't moved whatsoever, which happened when the New Zealand USD on Thursday night. So what I'm gonna be doing heading into next week is going to play the ranges until the ranges break. So let's go right into it and take a look at the majors and see exactly what I'm going to be looking at. The first pair I'm taking a look at is the Euro USD cross. As you can see, this pair right here has been in a range, has been in a relatively tight range, with basically the top of the range being made by the top of the fib range, which comes in around 130.30, and the bottom is created by a scattering of daily support levels ranging between 128.30 all the way down to 128. And more importantly, if we look on this on a daily chart, you can see there's also a 200-day moving average that comes in right around, you can't see it right there, comes in around 128.20, and this has been capping the price action also. So what I'm going to be looking to do is say any move up to the towards the top of the extreme here, to around 130.30 could be a good shorting opportunity, and any move down towards the 128.35 area could be a good chance to go long the pair. But in the interim, I mean, that's a pretty big area between 130 and 128.20. We could watch the daily price action and watch the 4 hour. I'm going to be watching the 4-hour candles for pushes up and down to get an idea of what the possible direction and the momentum of the pair in either way. And if we do get another break below the bottom of this fib level around 130.43, we could see another push down towards the bottom of the range, towards 128.20. So that's definitely something to keep an eye on. You know, if we finally do get a break above the top of the range in the Euro USD, we could definitely be up on our way to a test of the last month's highs in September around 130.170. So there's a lot of open space right there. If we do get a break above, we have to keep our eyes on that. All right, let's go on to the next pair we're going to take a look at is Great Britain USD. This pair has been trading very technically, so it's kind of fun to actually watch this one. The pair made a slow rounding turn last week at the 0.382 fib around 160, and then slowly glided back up into the descending trend line that we've spoken about many times around 160.90. This level, as we all know, has contained the price action for the pair over the last year and a half and so, but you can see that the pair did break above this level for a bit of time into the beginning of this week, and now we're looking for a push back down, or we're looking for a break or a push that down. So the range right now in the head of the week is the top of this descending trend line, and the bottom is the 0.382. What I would be looking for is if we get another hold of this level, we could easily see a push back down past the 382 to the 50 fib at 159, and that's the trade I'm looking into setting up into the beginning of the week, is to see if we get a good solid hold here to go short and put my stops above the 160 level, looking for a break lower. Now, if we do break above the top, the trade obviously would be negated, but then we would look for a push back up to this trend line to see how the price action reacts there, and to see risk trends, and then if we and to see if we get another bounce back there, and the same trade could be in place again at that same level. And if that is the case, you would begin to think that the pair is not too concerned about this descending trend line any longer. Let's take a look at the Aussie. The Aussie basically started the week off at its lows. It moved down to test the recent push lower at 105, 101.75, and 101.50. It looked like it could break below, and then it reversed very slowly and gradually for the remainder of the week and moved up towards the top of its current range between 103 and 103.25, 103.30, let's say, before the pair kind of gave up a little bit of ground heading into the end of the week, and now it's sitting about mid-range at 102.30. So with this player right now, right here, there's really not much to do except watch the top. in the bottom of these very compact ranges between 101.75 and 101.50, 103 and 103.25, and basically just play the ranges in this pair until the range breaks. If the range does break, we could easily move up quickly to the 50 fib at 103.830, the 50 fib from the move lower. If we break below that, though, we could easily move up down towards the 50 fib at 101.30, and that would be a more significant level because it's a 50 fib from the entire move up, and you could see buyers coming into this level. If we break below here, though, it definitely opens the pair up for a more exaggerated move lower that would initially probably target the parity level. Let's take a look at New Zealand USD. New Zealand USD uninspired trading right here. The pair was in a tight 90 pip range throughout the majority of the week. It didn't want to do much of anything, I would have to say. So heading into the new week, I'm just going to watch the weekly range. The top of the high is 0.8236. The bottom is right here, 101.40. And until the pair breaks below the top or the bottom of this range, we can probably just see more consolidation. But you can see that actually the range is getting tighter and tighter. So we probably will get a break. If we break to the bottom, though, we have support initially almost right away at the 50 fib at 0.8132. If we break that, then we could get a more exaggerated move lower initially than, of course, the 50 fib. But then more likely, I would be looking for a more exemplified move down towards the 80 level. Now, if we break above the top of the range, we could move back up to test the 83.50 level. So as with the other pairs, just play the range until the range tells you you can't play it anymore. It's the only really thing to do right now. The USD CAD, though, this actually has a nice setup. The CAD is trading in a 1 hour triangle, and what I would do right here is just play the inside of the triangle, and this triangle breaks. When we get a break at the top of the triangle there, we're at 98.20. We could see it move up towards 98.85. If we break to the bottom of the triangle, we could see a quick move down towards the 97.35 area. But you can see the 98 level has been a little bit of resistance, so you could use this as a pivot to see it could easily break up and almost become a wedge until you get a break higher or lower. So basically, just watch the triangle, play the triangle. It's nothing simple. It's nothing that difficult. It's rather simple in that pair. The Aussie, the yen, we've been talking about this all week. It's in a wedge. Until this wedge breaks, there's not too much to do, but it is a rather large 78.60 down to 77.50. You could play the inside, but this pair hasn't been moving at all, so I wouldn't risk my time with the possible intervention. The only thing I would do is I would only consider going along this pair and then move down towards the 77.50 level. Because if the Bank of Japan intervenes, we could see a very quick move higher in this pair, which would probably fade back lower, but you would definitely get stopped out unless you aren't using stops at all in that particular trade. Let's take a look at two yen crosses just because of their interesting nature. The first is the Aussie JPY. This pair has been very tricky to trade so far. Last week or so, but we did pull out 60, I think actually around 70 pips 70 pips on this on Wednesday night. But you can see right now the pair is in a bit of a wedge, and the top of the wedge is at 80.70, and the bottom is on this trend line that's moving higher around 79.90. So we have to get a break of either one of these sides. If we get a break to the top, we could quickly move up towards the 81.73 level, which is the descending trend line in a larger play. If we get a break lower, though, that would be the more interesting. We could be back down towards the 79.50 level, and we all know from the conversations we've had for quite some time, a break of that 79.50 level could open up the pair to a much larger move lower, and that's what we would be looking for a move that would down to the 77.50 level, and so on. The Euro JPY is in a triangle just like the USD CAD, but on a 4 hour. The top of the range is up here at 102.35. The bottom is down here at basically 100. We're just going to try to scalp trades in and out of here, looking for moves to the top and the bottom of the range. If we, top of the bottom range, we do have resistance here, daily price resistance at 101.90 for the high last week, and I guess the low would come down around. Let's see, the low for the week would come down around. Actually, I guess it's all the way down to this trend line. So you could see any push up to this. Find sellers in the beginning of the week looking for a push lower. All right, the trading systems are pretty easy. Playing heading into the week is pretty easy. Playing the range in most of the majors, watching the triangle and the Euro JPY and the USD CAD, and looking for any breaks to the top side or the bottom side to actually be limited relatively quickly, unless we have some significant news flow out of Europe, which could easily happen next week with next week or any week with that pair, because we constantly have summits and data flows and possible if Spain decides to take an ECB bailout, we could probably see the pair move higher, or any news out of Greece on its current debt situations. All right, traders, enjoy the rest of your weekend. This is the weekend wrap, and remember to keep your trades keen and play it safe heading into next week.